Looking to create reliable income streams from your investments? Well, dividend stocks might be the way forward. I'm going to give you a quick run through what are dividend stocks, what are the key metrics potentially to look out for, and then I'll also give you a run through one of the key research tools that I use, and that is Stockopedia. Choosing dividend stocks might be the way to give you consistent passive income if you go about it in the right way. Welcome back to the channel, and if you're new here, hi, I'm Mark of Desperately Seeking Fi. What are dividend stocks? I suppose that is a key question to be looking at, and they are basically stocks that will provide you a form of income, giving you a percentage of the profits that the company make. They are really popular with many investors because people like to have a regular income stream, money coming in, getting those dopamine hits as they see the income landing. They also tend to be slightly more stable than the really big growth stocks, particularly in times of a little bit of economic downturn. There are lots of different types of dividend stocks. You will have some that have tiny little dividend payments, things like Disney, right up to some of the really high percentage yielding companies, and you'll see those paying out 20, 30, 40%. Problem with these, the higher the dividend, the bigger the risk that they may get cut. And we know those as dividend traps. There are other companies out there that have got long track history of paying and increasing their dividends over time, and these are known as the dividend aristocrats. And actually within the S&P 500 you have 60 plus companies who have been increasing their dividend payments over 25 years. How do you go around choosing which stocks you're actually going to buy? First of all, you're going to be looking at, and I'm not going to go straight to where everybody thinks I'm going to go to, I'm going to go to their payout ratio. So what is the percentage of their earnings that they are paying out to shareholders as dividends? And this is really important because this is trying to figure out, are they going to be able to continue to pay out that dividend, or are they right at the top end and they're paying out all, or potentially in some cases more than the profits they have been making. There are lots of different ranges that you might be wanting to look at, but I sort of set 60% as my top end in most cases, but an ideal range somewhere between 30 and 60. Next, going to look at the dividend growth rate. Over time, has this company been increasing their dividend payout? Because what you want to see is that they have confidence in future growth and the fact that they will be able to pay back the shareholders for their confidence in the company. Then looking at the free cash flow, what cash is still left after all of the capital expenses and expenses of the company have been paid out, and this is really important to make sure that there is stability there and that the company can keep paying out dividends. This links a bit back into that payout ratio as well. And then looking at debt to equity. As you know with your own accounts, if you have got lots of debt, you're going to have to pay more of that money off to service the debt interest. So high amounts of debt could put pressure on the ability to pay a dividend. And the one thing that you're starting to see coming through from all of this is it's all about maturity and ability to continue to pay and increase the dividend, and that's why it is potentially more important than the final one that I'm going to throw in, and that is the dividend yield. Dividend yield is the percentage of dividend per share over the cost of each share. Generally, you want to be looking somewhere between the 2 and the 5 or 6%. That's my normal range that I'll be looking at. If it's going much higher than that, as I mentioned earlier, you may have a dividend trap. So they may be trying to entice shareholders in with a really high dividend yield, but potentially because of all of those other metrics, they may fail to continue to maintain that. And if you've invested all your hard-earned money into there, you may see no growth in the company, and you may also see a cut in the dividend payout. And with that, you may not be able to cover all of your expenses that you require from your dividend income. As I said earlier, one of the key tools that I use to go and help me with some of my stock research is Stockopedia. If you're interested in having a look at this, I'll drop my affiliate link down below, and if you go and use that, you will get 25% off the price of whatever package you go for. This is a great tool. I use it all the time to basically go in and help narrow down my looking at different types of stocks, and I'm going to show you sort of the stock screener that you could set up to have a look at narrowing down the dividend companies that you want to have a look at. But first of all, some of the key things that Stockopedia provide you. They will give you in-depth analysis into different companies, and they have set up lots of different screens already, so you might want to go in and have a look at a guru best dividend screen and go in and have a look at that, or you might be going for winning growth and income and go and have a look at the different companies that fit under those different screens. As you jump in and have a look at a company, you will get to see this overall review of the company, and we've got Associated British Foods here. Stockopedia use their own metrics of quality, value, momentum to then create a stock rank. So basically you are looking at investing into high quality companies that you can buy at good value that are also showing good momentum, i.e. the price of the stock is increasing. And if you can get all three of these to come together, you will get a really high stock rank. And for example, you have this stock rank coming in at 94 out of 100. Lots of information on here. If you want to go and have a look, where Ed will take you through what the tool actually does, but you will get a quick stock chart, you get details on quality and value of the company, you get to see lots of detail on the financials, all set up in a really easy way to have a look at it, and then you get to see what dividends are looking like, as well as balance sheets, and lots of details also about the company, what sector it's in, what industry it's in. And it isn't just the UK. You can go and have a look at different regions as well. So if you are interested in the US, you could buy the US package with the UK package. Let's go and set up a quick screen, and I'll show you how easy this is to do. So let's do this new screen for the UK. First of all, let's set up under dividends, we'll go for yield, and we want to do this between 2 and 6%. So let's just go and say that we want higher than 2%. And what you will see is, if you look at the number of results here, as I toggle on and off this rule, you will see we go from 1343 companies in the UK search down to 470. So that shows you that we've almost cut this to a third of the companies, and this is why this tool is so great, because you very quickly filter out some companies and reduce the amount of companies that you're going to have to go and do some further research on, and we'll cut this right back as we move through and add in different rules. And you can change the time period that you are looking at. We'll just leave it at trailing 12-month dividend yield. We want that to be less than 6%. So we're now down to 320. Let's add in the next rule, and we will look at dividend payout. So I'm just going to type into this search bar, and there we go. Under dividend safety, we have dividend payout ratio. Let's add this, and let's say that we want this to be less than 60% and down to 225 now. Next one, we are going to look at the dividend growth, and I'm going to look at dividend per share, compound annual growth rate, and I want to look at that over the last 5 years, and you will get a description of what this is looking at in this box. Let's add that rule, and let's go for, we want to be beating inflation. Say inflation is at 3%, we're now down to 97 companies. Let's do one more. We will look at debt to equity, and let's add net debt to equity, and we want to have that, say, at 50% as well. So that takes us down to 79 companies. Many of those you probably haven't even heard of. So let's put in one more rule and we will reduce this down to looking at large cap companies. So we could do group size, we could add that rule, and it just includes large caps at the moment. There we go. We end up with 7 different companies. What you will see is you have got the stock rank over here. So what we might want to go and have a look at is just looking at those really high scoring stock ranks. So looking at HSBC, Associated British Foods and NatWest, maybe the 3 companies that you actually want to go and do a little bit more detail on because you've managed to filter out the others. You can go and do whatever you want to look through and do your screening, and all you then need to do is basically you just go up, you can decide that you want to save that, you just then rename it, and I think you can create up to 25 different screens within your Stockopedia setup. And if you save that, things will change on a daily basis. I have created, if you've seen my portfolios, you will see that I have created a UK house builder, and that looks very different to the house builder pie that I have on Trading 212 at the moment. So you can just come back in and have a look and see whereabouts these companies are, and it might be that you want to just filter things on a quality momentum or a quality value or a value momentum ranking instead of going for the overall stock ranks. It's up to you. You can use this in many different ways. So what it really does is it just makes your life much easier. It allows you to just focus in really quickly on companies that you want to go and do a little bit more research on. Potentially, instead of looking at the whole market, you're just narrowing in on 3 companies that you want to go and have a look through their annual reports and see what happened in the last couple of earnings calls. It really does allow you to be a lot more laser focused if you are looking at going down the route of investing into individual dividend stocks. But maybe that isn't what you're interested in and you just want to buy a lot more of the haystack, and an ETF might be something that suits your investing strategy and approach a lot more. Why don't you go and have a look at this video where I talk about a number of different ETFs. If you are interested in going and having a look at Stockopedia, link is down below. Using my affiliate link, you will get access to it and get 25% off purchase price, and I obviously get a little bit of a kickback, and any support, even a like or a subscribe, would be greatly appreciated. Thanks very much for watching. I will see you in the next one. Cheers, bye.